whatever predictions people are making are just like wild guesses, I guess. It's not evidentiary. Yeah, it's not well thought after.
Right. Now, I can't see you. All I see is your icon,
So
but
there is a reason because I'm switching off my camera all the time.
okay. Okay. That's
So
okay.
yeah,
That's okay. If you
because
want to switch it off for now, that's fine.
no, it's fine.
Uh,
So the network, like in India, we still are working on 4G, 3G, and 4G.
yes.
So it's very difficult to get a very uninterrupted network, except in like um, main centers. And because of
Right.
COVID, there's a large scale use.
Oh, yes. Right.
Yeah.
Yeah, they're saying that even in the U.S. Uh, I was on a webinar the other day, and someone mentioned that because everybody's on the internet now, whereas usual times they're not.
Yeah, yeah.
So the systems aren't. They're saying the systems aren't used to that.
Yeah, so yeah, that's the reason. So we were still thinking, government was thinking that how soon could we start 5G? Because if
Yeah.
there's 5G, it's better connectivity. Um, in fact, interestingly, in India, there was a petition filed in the court where some student body said that you cannot have online classes because that's against the principle of equality. I mean,
Oh,
considering the big divide in India,
yes. Well,
you
we even have some of that here in the U.S. A digital
really,
divide.
really,
Yeah.
great.
Oh, yeah. Well, not everybody has a personal laptop or,
Yeah,
especially, well, at all levels of education, but especially the elementary school and the.
true. Yeah. So, Urushi, I'll leave it to you now to take it forward. I'll be here, and I'll do the easy task, which is asking questions. And Urushi, you carry the conversation now. Yeah. Thank you.
So good evening and a very warm welcome to the Friday Web Talk series. Today we are fortunate to have with us Mr. Kargman, who is the founder and president of Kargman Associates and is a leading expert on debt restructuring. He has worked on numerous high-profile and complex restructuring transactions in the emerging markets. To cite a few, $13.9 billion Asia Pulp and Paper restructuring case and $1.85 billion AHMSA Steel Company restructuring case was done by Mr. Kargman. He is also the member of a very reputed international insolvency institute. So we have already shared his bio with everybody. So there's a lot to talk about and we cannot stop. So I'll not just break the conversation and give the floor to Mr. Kargman. Welcome so much, sir.
Oh, thank you very much. It's a pleasure and privilege to be able to speak to IICA today. And what I'll do is I will be speaking about the emerging markets and the challenges posed by the COVID-19 economic slowdown on the emerging markets and how that will affect different types of restructurings that take place in the emerging markets. So I think now we're ready for the PowerPoint. So we'll follow the PowerPoint and go from there. As I said, the subject of the talk will be challenges of emerging market restructurings in the age of COVID-19. And just to put this in context, the emerging markets, like the rest of the global economy, are facing serious economic challenges. But in a sense, the emerging markets are even facing greater challenges because, among other things, they have less fiscal space than some of the advanced countries, such as the United States and some other countries that can enact large fiscal stimulus and recovery programs. So here I discuss a variety of factors that together constitute a perfect storm for the emerging markets. There's the overall global economic slowdown, and then within that, there's the emerging market economic slowdown. And of course, the international financial institutions, whether it's the World Bank or the IMF, they've all made fairly pessimistic projections for growth in the emerging markets in 2020. And actually, they don't see a recovery until 2021, but the recovery might be slower than people are expecting. And it's interesting, one of the things about the forecasts from the IMF and the World Bank, they've been revising them the IMF, for example, has revised its forecast a few times in the past few months, and each time the forecasts are becoming a little more pessimistic. And the World Bank in early June projected that global GDP would drop 5.2% for the year 2020. That's on the global basis. Emerging markets, 2.5% for 2020. And that's, according to the World Bank, the slowest rate in many years for the emerging markets, which in recent years have been doing fairly well. Now, there are other factors that will affect the emerging markets. One is the drop in global trade that's now taking place, and the expected disruption of global supply chains, which emerging markets have fed into in recent years. With that disruption, there will be fewer export markets for the emerging economies. Another major factor is the sharp drop in commodity prices. Many of these economies are very dependent on export of commodities. For example, the oil exporting countries, which are located around the world, Latin America, Africa, and so forth, Central Asia, those countries have been very hard hit because the price of oil has dropped so significantly. And many of these economies depend on oil revenues in a major way. Then, when this COVID situation started a few months ago, there was a phenomenon that economists refer to as a so-called sudden stop. There had been money flowing into the emerging markets in the preceding years, but all of a sudden, tens of billions of dollars flowed out of the emerging markets. I think the figure was in March, April, perhaps $80 billion all of a sudden flowed out of the emerging markets. And so that again has a negative effect on the emerging economies. Furthermore, many of the emerging market currencies have suffered a major depreciation in their currencies vis-a-vis hard currencies such as the United States dollar, the US dollar. And as we'll see in the presentation, that can also have a major negative effect on the emerging economies, particularly to the extent they have debt obligations that are denominated in hard currencies such as the US dollar. It makes it more difficult to service their debt. But as I say, many currencies around the world, whether it's the Brazilian real or the Mexican peso, the South African rand, the Indonesian rupiah, these have all suffered major depreciations in recent months. An additional factor that's not discussed so much or doesn't have as high a profile is the significant decline in remittances from overseas workers. These overseas workers are very important for many economies around the world, whether it's the Philippines or countries in Latin America. They send back billions and billions of dollars to their home countries, and that's a major source of foreign exchange for many of these countries. So that is another very negative effect for the emerging economies. Moreover, a number of these economies are very dependent on foreign tourism. Foreign tourists coming to their countries and spending money at hotels and restaurants and so forth. But with the shutdown of international air travel, there's been an obvious decline in foreign tourists visiting these countries, and that's been resulting in a major loss of revenues for many of these countries. As a general matter, the COVID-19 situation has put a serious strain on the public finances of emerging market governments or sovereigns. For one thing, they've had to spend money for relief and stimulus for their economies. And as I mentioned in my opening remarks, they don't have the flexibility that the larger economies have in terms of what economists call fiscal space. So they've had to put money into stimulus and relief spending, but of course they've also had to increase spending on healthcare to address the direct effects of COVID-19 on their populations. And COVID-19 is arriving later in many of the emerging markets and developing countries compared to the advanced economies. So we perhaps have not seen the full effect of COVID-19 on emerging markets and developing countries, but we're starting to see that in countries such as Brazil, for example. Now, here we'll discuss how this COVID-19 related economic slowdown will affect various types of restructurings. In other words, the economic slowdown will generate restructuring activity throughout the emerging economies, but there will be different types of restructurings. One type of restructuring that often captures the headline are sovereign debt restructurings, when national governments have difficulties paying back their debt. So that's one type of restructuring, sovereign debt restructuring. Then a second type that will be implicated by the COVID-19 economic slowdown are corporate debt restructurings. Most of you are no doubt familiar with that category of restructurings, but that's when the companies have difficulty servicing their debt. Then there's a third category which doesn't get as much attention in the news media, and those are so-called infrastructure project restructurings. For example, if a power project or a toll road has difficulty paying back its debt, that could be a major challenge. Then there are two other types of restructuring related issues that I will address in the presentation. And the first relates to state-owned enterprises. So in other words, not private enterprises, but enterprises owned by governments. We'll see that the economic slowdown will have an effect on these SOEs as well. And then finally, another area to keep one's eye on are the so-called non-performing loans held by banks. The shorthand for that, generally, we refer to that as NPLs. I know in India, call it NPAs, non-performing assets. But with the corporate debt restructurings and corporate debt distress, we can anticipate that will affect non-performing loans. Concretely, that could lead to a major increase in NPLs for banks. Now, we'll first discuss sovereign debt restructuring in the emerging markets. And as a general matter, we are already seeing weakening public finances in the emerging markets as a whole. In other words, the balance sheets of the national governments are already suffering from strain. On account of what I was discussing earlier, the governments have to make expenditures to stimulate their economies and to spend on healthcare to deal with the public health issues raised by COVID-19. And the rating agencies, the credit rating agencies, are very attuned to this situation. And Fitch Ratings, for example, is projecting a record number of credit downgrades for sovereigns this year. Many developing countries and emerging markets are already going to the IMF, the International Monetary Fund, to seek financial assistance. In fact, the reports are that over 90, perhaps even approaching 100 countries have already gone to the IMF seeking emergency financial assistance. And so that gives you an idea of the scale of the problem facing these countries. And these are not the full-blown IMF rescue packages. These are shorter-term packages, but that are needed on a very expedited basis. Now, in recent years, many sovereigns in the emerging economies and in the developing world tapped the international capital markets. In other words, for the first time, for example, a number of governments or sovereigns in Africa issued sovereign bonds. And so there's a whole new set of countries that are connected to the international capital markets. And so they will have to deal with sovereign bondholders if and when they have debt distress issues. And many of these first-time issuers, their economies at the time they issued these bonds, their economies were doing pretty well. For example, for some of these African countries, they might be very dependent on commodity exports, but that was okay because commodity prices, when they were issuing the bonds, were very healthy. So there was a commodities boom in effect. So they were able to tap the capital markets. Investors were willing to put money into these countries. Now, in this sovereign debt restructuring landscape, we have to bear in mind that there's a major new player that 20 years ago we wouldn't have focused that much on, and that is China. China has become the essentially the largest official creditor to the emerging markets and developing countries around the world. I saw a figure that they have about 600 billion or 700 billion of outstanding loans to countries around the world. So China will be a factor in a number of sovereign debt restructurings in emerging markets and developing countries. Now, in sovereign debt restructurings, there's one group of creditors that can create problems for the restructuring process. And of course, they don't see themselves as a problem, but the other creditors who are amenable to reaching a restructuring deal with the sovereigns see them as a problem. Those holdout creditors. Those are creditors who don't go along with a restructuring, and they hope to, instead of taking a haircut on their loans, as the other creditors may have agreed to, they hope to recover as close to 100% of their outstanding debt. So, they'll pursue litigation, sometimes very lengthy litigation, as was the case in the Argentine defaults from the early 2000s. And so holdout creditors can be a major obstacle to accomplishing sovereign debt restructurings, particularly in these emerging markets. And so both the sovereign and creditors who are amenable to a debt restructuring have to keep their eye on what the holdout creditors, often hedge funds, plan to do. Now, there's been an innovation in the last 20 years to help bind holdout creditors, and that's through so-called collective action clauses, where a supermajority, not 100%, but say 66 2/3 or 75% of the creditors can approve a restructuring plan. and that's supposed to bind these holdout creditors. But this gets a little technical, but some of the early collective action clauses were on a series by series basis. So some of the holdout creditors, let's say 66 2/3 was required. Let's say there are 10 series of bonds. The first series of bonds, let's say that's for $100 million. And so you would need, let's say, 66.2/3 million dollars to approve the deal, but the holdout creditors, in that case, they try to get a blocking position. So, for example, if they got 35 million to oppose the plan within that series of $100 million, they could try to block it. So, two issues to bear in mind going forward are the blocking strategies and the litigation strategies of these holdout creditors. Now, I mentioned China a moment ago, and China is not a member of what's known as the Paris Club, which is an informal grouping of major industrialized countries that are creditors to developing countries around the world. So China is not a part of the Paris Club, so they don't feel bound by the rules of the Paris Club and so forth. And so there could be two restructuring scenarios in the emerging markets and developing countries involving China. One is where China is the main creditor to a emerging market sovereign or an emerging market government. In that case, China may feel it has great flexibility to deal with the sovereign as it sees fit. In other words, doing so on its own terms. But there are other situations where China may be part of a multi-creditor situation. In other words, for example, in a current situation, Zambia in Africa, China is a major creditor, but there are also bondholders who are major creditors. So China and the other creditors, it will be interesting to see how much latitude China has in that type of situation where there are other creditors involved. And in that Zambia situation, Zambia is also approaching the International Monetary Fund for a financing package. So the IMF will be sensitive to China's position. Basically, the other creditors will not want to make a sacrifice on their debt. In other words, what we call take a haircut on their debt, if they think that sacrifice will benefit China, and China's not making a comparable sacrifice. So those multi-creditor situations involving China could pose some unique challenges and could be fairly complex. Finally, I've mentioned the IMF, but and I mentioned earlier that nearly 100 countries have already gone to the IMF for smaller packages at this point. But when there are major restructurings, the question is, will the IMF have the necessary firepower to address all of the sovereign debt crises in the emerging markets and developing countries that are likely to arise? The IMF has about $1 trillion of resources at its disposal, but some observers are concerned that the IMF may not have enough firepower if this blossoms into a full-blown debt crisis in the emerging markets and developing countries. Okay, Now we'll shift gears to talk about corporate debt restructurings. And the basic problem is there's a lower level of economic activity in many of the emerging markets and developing countries, in large part due to the lockdowns in many countries around the world. And that lower economic activity could lead to financial distress, widespread financial distress among companies in those emerging markets and developing countries. For example, during the Asian financial crisis, many companies in the affected countries, whether it was the Philippines or Indonesia or Thailand or Korea, many companies in those countries experienced serious financial distress, and there had to be corporate debt restructuring. Now, there's a positive development since that time, and that is that many countries around the world have improved their insolvency laws as a result of law reform efforts globally. Many countries tried to put in place insolvency laws based on or encouraging reorganization and restructuring, as opposed to the traditional focus on liquidating distressed companies. So that was a good development, and that provides a backdrop for restructurings, whether they're in court or out of court, because we say the out-of-court restructurings take place in the shadow of the formal insolvency law. And as many of you probably know, many countries around the world, in response to the COVID-19 crisis, adopted special emergency measures on the fiscal side, but also they modified their insolvency laws in certain ways to deal with the COVID-19 crisis. So that has happened in many countries around the world, that they have amended their insolvency laws in response to the crisis. Now, here, the next point is a general point. I use the British expression, mind the gap. We don't use that too much here in the United States, but I think it's very appropriate to the point I want to make here, which is in dealing with corporate debt restructurings in the emerging markets and developing countries, there can be a major gap between, on the one hand, the law on the books, what's in the statutes and in the codes, versus the law in action. How is the law actually implemented and enforced? And that can be a major challenge, particularly for creditors who read the statute or read the code and think the law works one way, but when they are in a judicial process, the law may work differently. So the law on the books versus law in action can be a major dynamic in emerging market restructurings. Another broad issue along the same lines is in a number of emerging markets, some observers will have questions as to whether the local courts in those jurisdictions in the emerging markets and developing countries have the requisite capacity or competence or even independence to handle cases fairly. Some other broad points about emerging market corporate debt restructurings. One can't ignore the role of so-called controlling shareholders in corporate debt restructurings in these markets. I think in India, you refer to such controlling shareholders as promoters or sponsors. Well, similarly, in many markets around the world, there are these controlling shareholders, often influential family interests, who in effect control the debtor company. And two issues arise in connection with that. Will the controlling shareholders play a constructive role in the debt restructuring process, or will they play more of an obstructionist role? And why would they play an obstructionist role? That leads to the second point. The controlling shareholders often focus on retaining control of the company. So in other words, they don't want to make too many sacrifices to the creditors that will dilute their control of the company. For instance, a tool that's often used in restructurings are debt for equity swaps, where the creditors exchange some of their debt for an equity position in the debtor company. But the controlling shareholders, they may not be too keen on debt for equity swaps that give the creditors too much equity, because that will mean the controlling shareholders have less control of the company, and that will affect ultimately the creditor recoveries. The creditors may ultimately get a lower recovery because the controlling shareholders are not permitting a transaction that would give creditors the amount of equity on an economic basis that they should receive in exchange for the debt that they're forgiving. So in emerging markets and developing countries, one can't overlook the role of controlling shareholders. And this raises an issue of whether there will be a level playing field between the debtor and its controlling shareholders on the one hand and creditors on the other hand. Some creditors may feel that the system is stacked in favor of debtors and controlling shareholders to their disadvantage, the disadvantage of the creditors. Another relevant issue is the role of foreign creditors. Foreign creditors, whether they're foreign banks or foreign bondholders or foreign government lenders, such as export credit agencies, in some restructurings, they can be among the major creditors to a company, or at least not insignificant creditors to a debtor company in the emerging markets and developing countries. Now, some of these foreign creditors, for example, certain types of bondholders, they may be very familiar with the insolvency and restructuring process in their home countries. For instance, they may have substantial experience dealing with reorganizations or restructurings in the U.S. courts under Chapter 11, but the problem is when they go to foreign countries, the systems may be totally different. The laws may be very different. The court systems may be different. So to the extent that they try simply to extrapolate their experience from their home countries, that could be problematic. Another issue relating to foreign creditors concerns their position relative to local creditors. Sometimes foreign creditors will complain that they're not being treated in the same way that local creditors are being treated. Now, the final point that I want to discuss in connection with corporate debt restructurings is relates to corporate frauds and malfeasance. Sometimes in these markets, when there's a major default or major debt restructuring, there are revelations of frauds or malfeasance at the debtor companies. For example, large amounts of money may have been diverted from the companies, and that can complicate restructurings because there are fewer resources available to support the restructuring, and so the creditors could suffer from that. Now, of course, corporate frauds and malfeasance are not limited to the developing countries and emerging markets, and as you know, there are some cases going on right now in the developed countries. One major company in Germany where there are allegations of major corporate fraud / malfeasance. So, but this is something that can be a major difficulty in some restructurings in the emerging markets. Okay, the third category of debt restructurings I wanted to discuss are infrastructure project restructurings, and whether that's toll roads or ports or airports or power projects. There has been significant investment in these types of projects in the emerging markets and developing countries in the last decade or longer. However, with the slowdown, the economic slowdown in these markets, that could affect the viability of these projects. Specifically, there are dual pressures on the projects from the COVID-19 economic slowdown. And I'll give you an example so you can see what I'm talking about. But there's a possibility as a result of the slowdown of lessened demand for the product or service produced by the project. For example, let's say we have a power project. We'll call it an independent power project that has private investment in it. But if the economy in the host country has slowed down, there may be less demand for the power being generated by the power project. So the utility that is supposed to take the power from the power project may feel that it doesn't need the power that's being produced by the power project, and that could create tensions between the utility, the so-called off-taker, and the power project itself. So that's one of the pressures, possibility of lessened demand. Another pressure relates to what I mentioned at the outset of the presentation, depreciation of the local currencies. The power project, for example, may need to pay its lenders in a hard currency, say US dollars, and therefore it will want the off-taker, the utility, to pay the project in dollars as well, or the equivalent of a hard currency. But the utility is charging its customers in the local currency, and so it receives its revenues in the local currency. So there's a mismatch between the revenues it's receiving in the local currency and what it needs to pay the project in the hard currency. And so with a devaluation, it makes it harder for that off-taker to pay under the power purchase agreement in the hard currency. So that puts these projects in some jeopardy. Let me move forward. Oops, hold on. Yeah. Oops, let's go back to 9. Okay. Yeah, 9. So that type of situation where the underlying economics of the project are called into question because there's not demand for the product that's being produced or the service that's being rendered by the project, or there's depreciation of the currencies, so the user or off-taker can't pay or has great difficulty paying the project. Those situations can lead to defaults, renegotiation of contracts, or restructuring of the underlying agreements, whether they're the operating agreements or financing agreements. And these project restructurings can be very messy. They can be very lengthy, and even contentious. And during the restructuring process, the parties may need to revisit a lot of fundamental parameters of the project, such as what is the appropriate project tariff to be charging the user or off-taker. So there may be a discussion among the parties as to what's the new appropriate or affordable tariff. We can go to the next slide. Now I'm going to discuss the 2 final issues: state-owned enterprises, non-performing loans. And I'll do this quickly because I know we're running a little behind schedule, but as many of you probably know, around the world, certain economies have state-owned enterprises, many state-owned enterprises. But even pre-COVID, a number of these state-owned enterprises may have been unprofitable or even effectively insolvent. And national governments have kept them afloat by pumping money into these SOEs on a recurring basis. Yet the SOEs, just like the commercial enterprises we were discussing earlier, they may also suffer from the effects of the COVID-related economic slowdown, and that might affect the viability of the SOEs just as it affects the viability of commercial enterprises. So SOEs, state-owned enterprises that were already experiencing difficulties, may see these difficulties exacerbated by COVID-related economic slowdown effects. I give one example here: national airlines. Governments around the world like to have their own national airline, a state-owned enterprise that functions as its national airline. They like the prestige, for example, of having a national flag carrier, but at what cost? That could be a very expensive proposition, especially if the national airline is not making money and the government has to continue to subsidize the national airline. We can go to the next slide. Okay, but the problem here in this current environment is the governments themselves may be short of resources to continue to fund these loss-making state-owned enterprises. So, in fact, they may lose patience or may be unwilling to continue to subsidize these loss-making state-owned enterprises. So finally, these state-owned enterprises and the governments that are supporting them will have to face up to the financial constraints of the state-owned enterprises. Just quickly, there are three avenues for the governments to deal with these unprofitable state-owned enterprises, and that is they can restructure the state-owned enterprises, or they can privatize the state-owned enterprises, or they can liquidate the state-owned enterprises. Each of those topics could require a complete lecture, but I just wanted to lay out the options. We could go to the next slide. The final topic, back to the preceding page, the first, non-performing loans. As I mentioned, the corporate distress will lead to non-performing loans for banks. For example, the non-performing, what you call non-performing assets in India, NPAs. In the Asian financial crisis, the widespread corporate distress in the private sector led to a generation of huge volume of NPLs. I'm going to finish up in 1 minute, okay? Okay, I hear some talking in the background, but some banking systems may already have lots of non-performing loans pre-COVID, and they will have new non-performing loans as a result of the economic crisis associated with COVID. But what will the banks do with these new non-performing loans? There are various things they can do, and we could discuss this further, but they can undertake basic debt recovery actions, execute on collateral, engage in debt restructuring. They can file for insolvency of the debtor. They can sell NPLs to private investors, whether as individual loans or loan portfolios, or they can securitize NPLs. In other words, sell securities based on the non-performing loans. Next slide, which is the last slide. And national governments will have to face up to the non-performing loan situations in their banking systems, because the NPLs weaken the banks, and so the governments don't weaker banking
Yeah, I think he's joining in a while. So meanwhile, you can post your questions.
Yeah, I think he got disconnected. Yeah, he should be joining soon. Yeah. So I request the audience, as Urushi ma'am has requested, if you keep posting your questions.
Okay, sorry, there was a slight disruption. The national governments will have to deal with the traditional way is to set up asset management companies, what you call ARCs, asset reconstruction companies, and governments will have to decide whether they want public versus private AMCs, and whether they want to have a master AMC or bank-specific AMCs. And governments will have to think about new approaches for this new era. I'm ready for questions. Sorry for the long presentation and for the slight technical disruption.
No worries, Mr. Kargman. That was an amazing presentation, amazing talk, incredibly informative.
Well,
Now
thank you
we
very
can-
much. Do you
So we
want to
can-
handle the questions?
Right.
So there are already a few questions. Yeah, Urvashi, if you could.
Right.
Yeah, Vineet has asked a question. Yeah.
Vineet, would you like to ask directly to Mr. Kargman? So Vineet has asked that it would be good if you could enlighten on the general ethical issues with restructuring and how different they are going to be with remote work during COVID-19.
That's a very interesting question. The ethical considerations. Well, let me give you one example. That's a very broad issue, but for example, when one is talking about sovereign debt, the creditors usually, as you all know, want to get the maximum recovery they can in any restructuring plan. But if they pursue that objective in the current circumstances, that can mean there's less money available for the government to address the public health issues arising from COVID-19. So creditors are being more mindful of those social or even humanitarian considerations in the current context with COVID-19. One sees this playing out in Argentina, for example, that the creditors are giving Argentina a little more flexibility because of the COVID-19 demands on their fiscal resources. So I don't know whether you call that ethical considerations or not, but it's obviously a non-monetary consideration on the part of the creditors. That's one example.
One thing I was wondering, Mr. Kargman, you beautifully connected the macroeconomic conditions with restructuring, which I think was a great learning for me personally. I was listening to Geeta Gopinath, and I realized that most of the emerging countries, they've reached out to IMF for fiscal help and fiscal assistance, and most of the loans were targeted around giving the basic necessities, being made available to their citizens. Now, given the times of COVID, where there's a liquidity crisis, there's also fiscal deficits that most of these emerging countries face. How do we fund these restructuring, especially in countries which are still developing and not have, very promising economic conditions?
Are you referring to the sovereign debt? It sounds as if you're...
General restructuring, how do we fund these restructuring? You did speak about debt equity conversion, but
Right.
how many people would be willing to buy this equity where the market looks gloomy as of now?
Well, that's a good question. Valuation always becomes tricky in a period of economic uncertainty such as we're facing right now. And so valuation of the enterprise, the corporate enterprise, becomes tricky. And so if you're talking about a debt for equity swap, the creditors who would be taking equity, they have to be careful in accepting any valuations that are put forward by the company because, as I say, it's harder to value a company in a period of economic uncertainty such as we're facing now. Now, sometimes what happens is, and this same is true in the sovereign debt context, there's the notion of an excess cash mechanism. In other words, the creditors agree to accept, let's say, 60 cents on the dollar. Let's just use that as an example. But if company XYZ performs better than expected in the coming years, then the creditors get an extra payout. So they'll get more than the 60 cents on the dollar. So that's one way to deal with the economic uncertainty. I could get into the counterpart in the sovereign debt, but there's this notion in sovereign debt restructuring. They call it GDP, gross domestic product warrants. So if Argentina performs better than expected, the creditors would get an extra payout. So it depends on how you establish that baseline performance, whether it's of the company or the sovereign.
Yeah, and I guess that in times of COVID, probably it's easier because there is a demand. Or the only thing is restricting the companies to, do that probably is because, because of, the certain externalities. But nobody can demand. Once this situation is in control, there definitely is demand in the market. There will be huge demand in the market. Yeah. Urvashi, do we have another question? Sorry for the noise from the back.
Am I still on the video?
No, that's what I wanted to even request you, that I cannot see you on the video.
Oh.
And trust me, the audience really wants to see you.
Yeah, something happened. Let's see.
It shows that network is a little weak. Is that so, Urvashi?
No, I think you would have to share the video again, like besides the audio button,
okay.
there is a video button. Because you got disconnected in the middle. I guess you haven't shared it after that.
I tried to share. Let's see. I don't know what happened. Okay, let's go on. I'm sorry.
No worries.
No worries. Yeah. Yeah,
So
Urvashi,
we have
I think there's another question
from VIP who wants to ask. Kushag, you can take your question.
Greetings, Mr. Stephen Kargman. I hope I am audible.
Yes, you are audible. Thank you.
First of all, thank you for sharing your insightful research and opinion. My name is Kushagra, and my question to you is, in the non-conforming loan space, NPL space, what is the role and importance of AMC, particularly in the United States of America, and what role they are expected to play post-COVID with respect to US economy in particular?
Well, that's a good question. We in the United States, we really haven't had an AMC per se in many years. The last AMC, major example of an AMC in the US was back at the time of the savings and loan crisis in the late 1980s. That was called something called the RTC, Resolution Trust Corporation. And so that was one example. But of course, in the 08-09 financial crisis, the government the federal government became involved with our banks through the TARP program, the Troubled Asset Program. But generally speaking, for example, today, there's no asset management company per se that's operational, and the banks, they have their own workout departments, and they also can sell their non-performing loans to investors. There's a pretty active market here. Now, the banks may not have seen the full extent of the financial distress of their corporate borrowers yet. So we'll see what happens when there's a rising tide of non-performing loans, how those banks deal with those non-performing loans, and whether the government has to take any action. Well, this is an interesting
question here.
Yeah, that's an interesting question. Go ahead.
Yeah, so one of the audience member has asked that China has put most of the developing countries in a debt trap, and then COVID attacks. In the midst of all these inevitable circumstances, how long would these developing markets take to revive, and what is the price they got to pay for such revival?
Well, that's a very interesting and complicated question. This notion of debt trap, what that relates to is that China has been making loans around the world, and many are in connection with the Belt and Road Initiative, BRI. And so those who subscribe to this debt trap thesis, what they say is that China has been lending to countries that they may need the infrastructure, but these countries have sovereign debt problems before they even take the loans, and the loans make those countries even more indebted, and with the country's overall debt burden becomes less sustainable as a result of the new loans from China. And so we're already in situations where this has arisen, and in India, you probably have followed this fairly closely, but there was that major port project in Sri Lanka, and Sri Lanka had difficulty servicing the loans for that port project, and so basically China and Sri Lanka essentially worked out a debt for equity swap in effect, which meant that China was given a 99-year lease on the port, and in return for debt relief for Sri Lanka. Yeah, and so that was one example of what's happened so far. And there are other situations now where China, the countries are unable to repay the loans, and China is requesting additional collateral to back up the loans, maybe assets in mines if the country is a producer of metals, for example. They take an interest in a local mine. So we'll see how this plays out, but this is going to be one of the very interesting developments to follow in the current environment, how China deals with all of these debt situations arising from Belt and Road Initiative and its other lending activities.
Thank you so much, Mr. Kargman.
If I can take the last question, Urvashi.
Yeah, of course.
Mr. Kargman, I was wondering, do you see that countries will ease out their foreign fiscal policies post-COVID to help countries finance their restructuring? Like foreign debt borrowing, policies around foreign debt borrowing.
Countries, we're already seeing that some countries are trying to raise capital to deal with the new demands on their budgets. But for example, if they try to issue new bonds, but the investors will be very sensitive to the risk that they're taking by lending money to those countries. And you remember at the beginning of the presentation, I was talking about credit downgrades. And so a lot of these countries are suffering from credit downgrades, and so that makes the debt more expensive for them. And so yes, they will try to run bigger deficits, but supported by external financing to the extent it's possible. And to the extent they can't get it from the private markets, they'll go to the lender of last resort, which is the International Monetary Fund. But when the countries go to the IMF, that comes with a whole separate set of constraints, what we call conditionality. The IMF doesn't just write a blank check to the country. It says, we'll give you this money, but you must do X, Y, and Z. You must cut your number of public employees, or you must privatize state-owned enterprises, or you must liberalize professions, rules regarding who can enter professions, and so on and so forth. Where the private market can't support the countries may go to the IMF. But as I was saying earlier, there could be a funding constraint even for the IMF. The IMF currently has firepower of about $1 trillion, but a number of observers are concerned that even $1 trillion may not be adequate to deal with all of the problems that could arise. No one is sure what's going to happen because a lot of it depends on how this virus progresses in countries around the world and how the countries around the world are able to mitigate and contain the effects of the virus.
Yeah, totally. So let's see how things evolve over time. And
Yes.
I'm sure we'll have to get back to you, Professor Kargman, Mr. Kargman, because you have seen decades of restructuring, So, we'll get back to you when things are a little normal and probably reflect back as to what we discussed today, how things have really evolved over time.
Oh, sure.
Yeah.
It's been my pleasure to speak to the group, but I hope it was helpful and informative.
Urishi, would you like to give a thank you note before I give a closing remark?
That was a wonderful evening, Mr. Kargman, with you. And I don't know, I think everybody learned a lot. I think that was the best talk of the series so far. I have no further words. Thank you so much. Thank you so much. We are highly obliged that you came.
Well, thank you so much for arranging this.
And in fact, let me add to that the fact that you explain things so lucidly, so simply, that inadvertently I'm calling you Professor Kargman because you just talk like a professor who understands, the concept well and takes it from the basics and builds up. And especially the way you talked about the gaps, in law, in action, and in letters, that is something which is really prevalent in emerging market. And probably it's a good exercise for all those who join to see, what could think tanks like ISCA work around to, to ensure that this gap gets filled in future. Thank you so much, Mr. Kargman. I would like to share with my audience that Mr. Kargman has a very, very, very busy schedule, but he was so forthcoming in imparting his knowledge, his experience with you. And I really hope to get you back, and this time exclusively for GIP students. And I really hope to have a long, cherished relationship with you and grow and let this program grow under your guidance. Thank you so much.
Oh, thank you very, very much for hosting me today. It's been a great privilege to speak to all of you at IICA. I really enjoyed it.
Yeah. Thank you so much.
Goodbye.
Yeah. Bye-bye. Have a good day.
Thank you.